Following that weaker than expected inflation number, does it change the dynamics when it comes to what the Bank of England's expected to do in coming months?
Well, not necessarily. I mean, if you remember, the MPC has signaled that it expects the cost push inflation in the UK to start subsiding from here, and that's now materializing, especially now that the positive impact from the past sterling depreciation is starting to abate. And I think from the Bank of England's point of view, that's actually a growth positive development, and it's going to boost the real purchasing power of the UK consumers. So from that point of view, I guess their plan for very gradual policy normalization is still very much there. Yeah.
And post the Brexit transition agreement yesterday, Valentin, is that a sort of a buy sterling moment? Often we've had these buy sterling moments, but it fades pretty quickly, doesn't it?
Yeah, it is tempting to maybe call for a sustained sterling appreciation. I think that it's safe to assume that we could see some gains in the near term, but depending on the, I guess, ever-evolving Brexit negotiations, that may well turn out to be a temporary really rally. I think at the moment we like sterling against currencies like the Swiss franc. We think euro sterling could head a bit lower from here. Over longer term, however, we have strongest confidence in terms of really projecting further gains for the pound is in the case of cable. It is more of a trend dollar depreciation rather than sterling trend appreciation, and that's our view at the moment. Right now, tactically, we're positioned for more gains in the pound against the Swiss franc in particular.
What is the fundamental driver of currencies these days, Valentin? Is it fundamentals, economic fundamentals? Is it political risk? Is it geopolitical risk? What is it?
Well, a little bit of everything, I have to say. It is very difficult to kind of disentangle all the sometimes conflicting drivers. Is it safe to say that at least at the start of the week, investors have been pretty defensive given the risks ahead of the G20 meeting that concludes today, and obviously the Fed tomorrow? The risk being that despite the fairly supportive global growth backdrop, bad policies like US protectionism could ultimately lead to very ugly, if you wish, sell-off in the global risk markets. So with that in mind, I guess a combination of both. But I guess our conclusion of all that has been that and a strategy we've been pursuing throughout the year so far has been to really apply a fairly well-defined regional bias in our trade ideas. We continue to like European currencies. We think that at times they are still quite undervalued. At the same time, we think that the Asian currencies, with the exception of Japan, really could continue to underperform. And that trade really short Aussie dollar, but at the same time long euro, long pound has played out reasonably well so far.